Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's September 18th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. You know, people always ask me, how is it being on your own? How is it starting your own publishing company? The positives, negatives. I can tell you it's really, really hard. And of course, it's positive and negative for anything you do. But just writing newsletters, doing 2 podcasts, researching, traveling, interviewing people all the time, all the calls throughout the day, managing a ton of work. It's a lot of work, but it's worth it because you get to do something that you love. But I don't know if everyone's asking the right question. Because I can tell you, compared to running a business, being a dad is like 100 times harder. Especially when you have 2 daughters. Sons, I think, might be a little bit easier, at least on my side. But having 2 daughters is definitely not easy. Because you want to discipline them all the time, then they cry, and I think I'm going to be on the side of a lot of dads here, but I'm a sucker when they cry. I mean, I can yell at them, and I actually say, stop crying, because they cry a lot during the day, you know, they're young, and, you know, I always feel bad like an hour later and say, oh, it's okay, but I can't be mad at them longer than a few hours. For example, my daughter Brianna was in a bad mood, actually yelled back at her mom, which is definitely a no-no. Take it from me, guys. It's definitely a no-no. Unhappy wife means unhappy for everyone who lives in a house with her, so don't do that. But anyway, my wife obviously punished her, sent her to her room, took her TV out of her room for a week. So she's going ballistic. And like, remember when you're a kid, how emotional you get over something that's really not a big deal? But she was just screaming, going crazy. So, you know, I said, let me go upstairs, try to calm her down. I sit next to her in the bed. I'm like, hey, honey, listen, you okay? What's wrong? What's going on? She's like, Mommy is mean to me, and I did nothing. I hate Mommy. I hate her so much. I can't stand her. When you're a parent, you go through these stages. That I hate you, Mom and Dad. So she's yelling, I hate her. So I did what a responsible father should do. I stood up, looked her right in the eye, and said, you really hate Mommy? She does everything for you, including taking to cheerleading, chess, Pokemon, which she's really into. Also bought her a dog, which, by the way, all of us do not like. It's not a good dog. It's not a fun dog. It does, anyway, bought her a dog and puppy. I said, so you really hate Mommy? So you better hope nothing happens to Mom tonight, because, man, you're going to feel sorry. And I just walked out of the room. That's what I told her. And as I'm walking out of the room, I was like, no, I don't hate Mommy. I'm sorry. I love Mommy. She's crying. Now, I don't know if that was the right approach or not for my oldest daughter, but, you know, making her feel guilty. Maybe not. I don't know. It's up to you if you decide that's right or not, because she is going through a lot of changes right now. And she's at that age, that age. Anyway. And she's really a great kid. I mean, she's mean as shit right now, but she's, 95% of the time, she's really, really good. And I thought that was a good way to handle it. I don't know if that was right or wrong, but it did work. And she apologized. Oh, no, nothing happens to Mommy. So, yeah, I just did the guilt thing on her, and that was cool. But it's funny because it's not just my oldest daughter. And there's a reason why I'm going in this, getting a little personal for you. You'll see in a second, because I'm going to share a story which I haven't shared with you yet. But my youngest, I told you already, has Crohn's. And actually not sure if it's colitis or Crohn's yet. The doctors keep going back and forth on it. But last week, she had to get colonoscopy. So this is her second. And the poor kid is just 8 years old. He's actually turning 9 next week. And she's taking pills every single day, which is sad. I mean, I didn't have to take a daily pill. Think about you guys out there. When do you have to start taking daily pills? Like 35, 36, 37? That's what, for me at least, it started. I mean, at her age doing that, I mean, she's obviously been through a lot. But the reason for the test last week, and again, I didn't share that I was going through this, was to determine if she should get new medicine since the current one is not working. And when I say not working, it's not putting her Crohn's in remission, meaning there's no red in her intestines, no pain or anything, which is the way it's supposed to be. You have flare-ups, and then, it's usually painful, and then they go away for a while. With her, there's like slight pain, a little bit of blood when she goes to the bathroom and stuff, which is normal, but it should be completely gone. So they said, all right, let's go and do this again. Again, it's the second time that she had this procedure, which is sad. But before you start feeling bad for her, my youngest is one of the smartest, most manipulative kids I've ever been around. I'm not kidding. And not saying this, not being biased here. I mean, she knows exactly how to get what she wants. And for example, the week of a colonoscopy, my wife and I was obviously spending a lot of time with her. We went to the hospital all day with her. I bought her a nice stuffed animal she could take to the hospital room, along with an LOL case with numerous little gifts in it. If you're a parent and have a young daughter, you know exactly what that is. Just spending a lot of time with my youngest, which, of course, my wife and I had to do. So I felt bad for my oldest daughter since, we're paying a lot of attention to her sister. I'm always conscious of that. And I said, look, you've been good and you haven't been asking for anything during this week and this time. I said, listen, I'll tell you what, when everything settles, we'll spend a full day together, which was Saturday. So I took her fishing, miniature golf. We had a great time. And before we left, my youngest says, hey, can I come? And I'm like, no. And she's like, well, why can't I go? I want to go. And I said, look, I spent a lot of time with you this week, duty procedure, and I want to spend time with my oldest. And you know what my sweet, innocent daughter says to me? But Dad, that procedure, it's not my fault. I didn't ask to get it. I'm just a kid. I have to go through all this, and I'm in pain. And all I want to do is hang out with Daddy by myself. Brilliant. Manipulative, creative, fill in a blank, any word. Anyway, I did what any tough father would do in that situation, and I completely caved. So the following day, which is Sunday, I took my youngest to the beach and for ice cream, and we had our own one-on-one time. Now, this is just what happened last week. Okay, that's just a week of all this stuff, and people say, well, how is it to run a business? That's a week. Imagine doing it full-time, being a dad. It's really, really tough because, man, it's a job that you're going to make so many mistakes, unfortunately, that you want to learn from. You want to do the right thing. And it's funny because the way everyone handles different situations, and I love the fact that everybody criticizes everyone else about their kids instead of really taking care of their own kids. But it's just funny how difficult that is compared to running a company. I think a lot of dads out there and moms will identify exactly what I'm saying here. Anyway. There's a lot going on with the markets, and I love sharing personal stories with you guys because you guys are my family, and it relates to everything that's going on. We're doing a couple podcasts today. Getting a lot of stuff out early because I'm going to be traveling to New York. Got a lot of things going on, which is really cool. But when I'm looking at the markets, a lot going on in what sector? Oil. And this is a sector that's been dead for a while. There's lower oil prices combined with rising supply and add most of the leverage that most of the oil producers sitting on. I mean, not just producers, drillers, the whole industry. I mean, this debt was restructured 2 to 3 years ago. I mean, you're looking at now very high interest payments on these debts. And, this couldn't have happened at a better time with drones. I know you guys read the story by now. It's the biggest story in the last couple of days. Drones attacked major oil processing facility in Saudi Arabia, knocked out 5.7 million barrels of daily production, or 50% of the kingdom's output. And that equals about 5% of the global daily production. It's a big deal, guys. There's a lot of stories out there suggesting the Saudis should have 2 million out of that 5.7 back online by next week. And other stories suggesting that this attack is only the beginning. The Saudis are blaming Iran for the attack, which could lead to further tensions, possible war between two very large oil-producing nations. So it's definitely going to have an impact on the sector. We could see manipulation in the meantime. Russia may even, Russia, other OPEC members, they already said, hey, we're not going to push out more oil. They kind of like that prices are going higher, right? Because they're all oil-producing nations. But it's going to be a lot of manipulation going on here that could keep prices higher long-term. That's why the bulls, a lot of them out there, predicting much higher oil price, at least over the next few months, maybe 6, 9 months, maybe 12 months, depending on how much tension there's going to be and how much this is going to escalate. Now, today's guest I'm bringing in is Steve Koomar. Steve's a regular on this show, good friend, editor of the Vigilante Investor newsletter. He covers the oil industry extensively. He's going to share his thoughts on how to play this news since there are so many moving parts. It's not just oil companies, guys. It's airlines, truckers, defense companies, drone companies. Since there's counter drones that have the ability to destroy the hostile drones. And of course, Steve's also going to share his favorite energy stocks to buy and which ones you should avoid because they're not all buys here. A lot of them have gone up this week for depressed levels. But Steve's going to give us a scoop on how to play oil and what the implications could be if these two countries go to war. So really great interview coming up. In my educational segment, I'm going to continue on that theme. It's the biggest story in the market. I'm going to give you my personal opinion on how to play the volatility in the oil sector. Since I follow this industry for well over a decade, travel to every major shale region in the U.S., cover this industry again for a very, very long time, have amazing contacts in this sector who I spoke to. And I want to share what they're saying with you because it's a lot different than what you're hearing in the news. So it's going to be a really great segment because I'm definitely going to throw some really scary statistics at you, which are definitely not being mentioned in the media. So good segment coming up for educational. Before I get to that segment, let's bring in superstar analyst, newsletter editor, and friend, Steve Koomar. And here's that interview right now. Steve Koomar, thanks so much for coming back on the podcast.
Oh, it's a pleasure to be here, Frank. Thank you.
So listen, I brought you on short notice because I know you cover the oil industry extensively, and there's a couple of things that you've been saying for a while, which you're going to get to a little bit later, which is exciting about oil and about, just global and geographic and economies themselves, which, again, is going to be very interesting. But let's focus on the latest attack from Saudi Arabia and what it means, because you wrote about this, and I love your take because it's a lot different than what you're hearing out there, and they're saying maybe it's a rebel attack, maybe it's not a big deal. Tell us why this is a big deal.
Well, this is really an extension of Iran's hostility within the region and specifically towards Saudi Arabia. And Iran is really struggling economically, and I think they're trying to find a way to break out of this sanctions regime that's basically closed down their exports entirely. And this attack, they had their agents, the Houthi rebels in Yemen, claim that take credit for launching the attack via drone, but the drones that they would have had available to them could not have gone that far to get to the Saudi processing facility that was taken down, or the oil field. And it's pretty clear that the attack originated from either southern Iraq, an area that was controlled by Iranian terrorists there, or from Iran itself, and increasingly it's looking more and more like it came from Iran. Some kind of a coordinated attack between drones and cruise missiles. So this is an extremely hostile action by Iran to be taking out their neighbor's oil facility, and Saudi Arabia is, in total, 10% of global production. The amount taken out is about 5% of global production. And Saudi Arabia also has most of the world's excess capacity. Like if you ever have a short haul somewhere, Saudi Arabia is about the only place that can just crank up production really quickly and start exporting it. I mean, even in the U.S., you can crank up production, but the infrastructure in the U.S. is so overwhelmed right now with accommodating the expansion that's taken place, that getting more oil out of the U.S. or even out of the U.S. strategic reserves is a real logistical challenge. So taking out a lot of Saudi Arabia's exports is a really big deal in the oil markets. So far, it's been downplayed by the Saudis for some really good reasons, and it's been the oil market hasn't really reacted that significantly to it. I mean, oil prices are up, but the Saudis have promised to keep their exports running at the same level they had been by drawing down their reserves, and that might satisfy the market if they can get their production back online quickly.
More and more research is being available, and you're seeing satellite imagery of this. And what I am reading now, which is kind of amazing, is 17 different strikes, which targeted 14 storage tanks and 3 processing trains. What surprised me was the precision of these things, where the drones hit these tanks at the exact same spot on every single tank, right? So this is coordinated. This is professionally done. And when I look at, it's not rebels, which is first. This is something done by obviously people know what they're doing, and not to mention that nobody was hurt, right? Which is, they did it at the perfect time. It makes me feel like, they had to know what was going on at this. They knew exactly the places to hit, and they hit it at a time when nobody gets hurt, which is just, to me, that's questionable. When you're looking at these details, what do you think is going to happen because it seems like the Saudis, and when I'm looking at all this information, I mean, they can't sit back and do nothing because they're going to appear weak, but yet are they going to go in the opposite direction and possible conflict? Because you are predicting the possibility of a full-scale war, which, you predict not just in oil, but you said it's probably going to happen over the next 10 years, which you've been writing about. And again, you have a lot of great research to back that up. Explain exactly what that means and what could happen, because to me, I think there's a very high probability of that happening.
Yeah, I think, I don't know whether this particular situation is going to spin out of control into a war, but the conditions are there at any point in time for it to potentially happen. There is really Iran has become an intractable problem in the Middle East. And there are other flashpoints around the world in Russia related to the Baltics, and Russia really not feeling secure without control of the Baltics, and so as well the Russia's southern border as well is another potential flashpoint. There are a lot of places where a war could develop, but probably this is the most likely place. And what you're seeing right now with Iran starting really taking such an aggressive offensive action and taking out its neighbor's oil production, it could easily escalate. I think right now Saudi Arabia needs to make some kind of a retaliation to show that the country is not they're not complete wimps and you can't walk all over them. And the question is, what do they do? And does that prompt another response from Iran attacking Saudi Arabia? So, for instance, Saudi Arabia could take out really all of Iran's export capability if they bomb Karg Island. 100% of Iranian exports flow through Karg Island. It's a pretty concentrated, pretty easy target to see. It might be well defended, but I think you could get to it eventually if you worked at it hard enough, and really take all that production out. If Iran loses its production in that way, I mean, what does Iran have left? And you have to wonder. I mean, they have a massive army, and they have long coveted the Saudi oil fields, which are largely in Shiite territory, and it wouldn't be insurmountable for Iran to send its armies across Kuwait and into Saudi Arabia. And in that situation, really, Saudi Arabia has a tiny army. I mean, I think they could inflict some damage on Iranian invaders, but there's really almost no chance that they could stop them. And I don't think that anybody else is really in a position or willing to go out there and sacrifice their army to protect the Saudi oil fields. So
now, Steve, has that changed?
It's been out of control.
Has that changed? Because, we saw Iran, I think it was it 1980s, right? Where Saddam Hussein invaded Saudi Arabia, and, correct me if I'm wrong on this with my history here, but, obviously we got involved. But is this a different situation? Because back then, I mean, OPEC, especially Saudis, the control of oil was a big deal. Today, we're the largest producer of oil in the world. Does this make us kind of more hesitant to even get involved in something like this to help them out? Because it would be a big deal if you're saying that Iran could move their troops into Saudi Arabia and actually win against them without any help from either side. But how does the U.S. stand from this? Is it different because now we're producing our own oil compared to that could lead to a massive, massive shock in prices? And so could this, obviously. But I'm wondering, your take. Yeah.
Absolutely. It's a completely different situation. In 1990, the world was dependent on Middle Eastern oil, and the U.S. was even more dependent than most other countries. I think it was U.S. was importing maybe half of its oil at that point in time. Now the U.S. is a net energy exporter. There may be some imports coming in from some places, and there's also some exports, and it's really more a logistical factor that there are any imports at all. It's just a matter that the U.S. has refining capacity, that heavy crude works in the U.S. refineries, and the U.S. isn't producing much heavy crude. but the U.S. doesn't need any oil from anywhere else in the world. And so there's really no vested interest in protecting the flow of oil for the United States. The U.S. allies desperately need that oil. But increasingly, you can see the U.S. is less and less interested in protecting the interests of all of the rest of the world. I think the U.S. could get pulled into a war there at some point in time, but the U.S. doesn't have a vested interest in protecting the flow of oil out of the Middle East. And if there was a big invasion, like there was the invasion from Iraq into Kuwait in 1990, I don't think the U.S. would sacrifice its blood and treasure to the same extent that it had in the past to reverse that invasion. I just don't see it anymore.
Yeah, and I said 80, and you know your history better than me, which is 1990. But I knew that the situation because I've been reading about this like extensively over the past few days. Now, there's a lot at stake too, right? Because you talk about the Saudi Aramco IPO, which is on slate, and it could be early into the year. I don't know if they announced an official date, but it is coming. So, I think plans were for over the next 6 months. This is going to be the largest IPO in history by a mile. I didn't realize how big this was, but their valuation is going to be $1.5 to $2 trillion based on right now and the estimates that are out there. So it's massive, right? So now they're announcing that they may delay this. How does that impact it? Because again, you have to throw this into the mix because this is a big deal. This is coming out. It's been in the works for a very long time. And now you're looking that you may delay this. Does this impact anything? Does this impact valuation? But this also adds to the Saudis. It seems like they really need to do something like this or make a statement to me. But what are your thoughts? Because I know you wrote about it on a Saudi Aramco IPO. Does this change anything?
Yeah, I think what it's done is it's made the Saudis much more reluctant than they normally would be to retaliate. I think they need to downplay this whole attack and make it look like it was not a big deal. Because if it looks like the Saudi oil assets are at risk and they could be taken over by a hostile force or taken down pretty easily by a hostile force, which they just were, and that could really be economically costly to the country, to the company, then it's going to be very hard for them to sell their stock at any reasonably high price that they would like to get. So right now, I think they're trying to downplay it. They're trying to make it look like this is all pretty routine, and they're going to try to stage a recovery as quickly as possible. It's probably inevitable that it's going to delay the IPO, but they still want to do it as quickly as possible. And I think that the Saudi royals have a very, it sounds like their agenda for doing the IPO is it gives them the money to diversify their economy, and they see some demographic challenges coming down the road, and they see a need to diversify the economy away from just an oil economy. This allows them to take some money out of their oil investment and spread it around to other projects that they want to invest in domestically. And it's kind of like this is really a critical time for them right now. They're going to try to maintain a peace as much as possible. For that reason alone, there may be very limited retaliation and possibly even no retaliation, but no retaliation could very easily encourage another Iranian attack some point down the road, maybe fairly soon.
Yeah, it definitely makes sense. So how do we, I mean, this is a big question on everyone's minds. How do we play this as an investor? Maybe people say, oh, well, I missed the boat. A lot of these things have went up and, they're coming down a little bit now today, but early on, they were up a ton. Is it buy U.S. shale oil plays? Is everything oil projected to go higher, at least in the short term? And, as you know, Steve, I'm telling everyone else to keep in mind, this is one of the most shortest sectors in the entire market heading into this week. And for me, I've seen almost all of these names, more than 20% of their float. I've seen as high as 45% of their float short. And that's why you're seeing some of these massive moves that went up 17, 20, 23% in one day. A lot of these shorts are covering. But I guess the question on everyone's mind is, how do we play it here? What's the best way to play it? Because what you're saying here, Steve, is that even without a conflict, it could warrant another attack, or there is going to be a conflict, which either scenario seems like oil prices are probably going to go a lot higher from here. And this is still a depressed sector. What's the best way to play it?
I like owning some of the shale plays in the U.S. The ones that I like are the very lowest cost producers in the sector. I like being in the Permian, and I like having the lowest cost producers in the Permian that have low debt. And I like being in the Marcellus for gas. And once again, low cost producers with low debt. And the reason for that is that prices, you could be wrong. Prices could stay relatively low. But if you are with a company that's going to make high profits regardless, even if oil prices don't rise significantly, then you're going to win either way. I think right now, the Saudi Aramco deal hanging over the market might be suppressing the share price of a lot of these companies, oil companies all around the world, because investors have to be getting ready to buy that at some point in time, and so they might be making room for it. But wow, this sector is so cheap. I mean, I've never seen it this cheap. And you can buy. There are some companies out there in the in the Permian, like Diamondback Energy. The symbol is FANG, F-A-N-G. It trades at a forward price earnings ratio of about 10 times, and it's expanding its production about 30% a year. And it will for quite some time going forward at that rate. The company has very low debt. You don't know if you're going to make a home run on it in the next 6 months, the next year, the next 2 years, the next 3 years, but this is a company that at some point is going to pay off in a very big way when you have those kind of numbers. When it's trading that cheap and it has that kind of growth. It's very rare that you'll find this kind of an opportunity. And it's an under-owned sector. At some point, it won't be. So
definitely makes sense.
That would be one of my favorite picks right there.
Yeah, no, I love it. So moving away from oil, and this is going to be the last part here, because thank you so much for coming on. I said this earlier, it's short notice. I really appreciate it, because it's someone I want to get who covers the sector extensively to give good information to my listeners. You are actually going to start writing for us, right? I wanted to talk to you about that, because everyone's going to get much more familiar with you, which is hopefully a good thing, right? You're going to get much more criticism and more emails, which is awesome. But on a weekly basis, talk about that, because I'm really excited that you're going to be writing for us every week, with the potential of starting a newsletter behind you. And, I'm going to expect feedback from everyone who's reading your stories on CurzioResearch.com. But talk a little bit about that, because, we discussed what the story is going to be about and going forward. But talk a little about that and get people excited, because they should get excited, because a lot of your research is fantastic. It's different from mainstream, what you're hearing out there, and you also provide really good picks. So maybe talk about some of the things that you may be writing about in the future.
There are huge geopolitical transformation going on across the world. A lot of it's driven by this massive load of debt that's private sector debt that's hit not just the United States, but really every major economy in the world. And the U.S. is changing the way it operates in terms of trade, in terms of defense policy, and all these things have massive ramifications. And what I'll be doing is I'll be going through just different topical issues that will cause a radical change to the way the economies and the financial markets are going to be working going forward, and highlighting a few investment opportunities that investors should think about. So I look forward to connecting with your readers during that time.
No, really exciting stuff, Steve. Well, thank you so much for coming on. And guys, you're going to hear a lot more from Steve going forward. He's going to be writing for us at least once a week, once every 2 weeks, but it's going to be really exciting stuff. So definitely give it a read at CurzioResearch.com. And Steve, I'll talk to you soon, buddy. Again, thank you so much for coming on.
You bet. Thank you, Frank. Appreciate it.
Yeah, it's great stuff from Steve. He was giving you an opinion that you're not really hearing out there. I mean, I love his stuff so much. Did it with Sutmeyer. Have Sutmeyer writing for us, writing chart of the week, getting very positive feedback from that, give you different levels, where to buy different sectors, different stocks. Again, that's for free, guys, on our site, CurzioResearch.com. Just go there. And now Steve is going to be writing for us as well. The macro part, a lot of people are asking, hey, Frank, could you give more of a macro view? Have people talk about it, maybe start a newsletter about it. Steve is great. Comes with macro, top-down analysis. Not only does he break it down, different geographies, different markets, different sectors, but he's filtering down to the stocks that you need to own. But he's going to be writing for us on a weekly basis going forward. Again, a lot of guys that are interviewing, that I'm interviewing in Wall Street Unplugged, We're trying to get on as contributors. This way we have more original content and different opinions out there. It doesn't have to be, what Frank Curzio says is Curzio research. No, I like getting different opinions. I like hearing the other side, especially when the research is detailed and it's really good. For me, I always love that because I always want to get it right. And by only getting it right, you got to look at the risks. You got to look at the negatives. And a lot of times when people do research, they just focus on the positives and why I like the stock. But it's nice to get the negative opinion from someone on the other side because they also do a ton of research on their end. But anyway, more and more people, you can see more original content on our site, Curzio Research. This is all for free, guys. CurzioResearch.com. Steve's going to be writing for us. Very, very excited. Love the interview. But again, I always say this and I mean it. This podcast is about you. It's not about me. Let me know what you thought of that interview at FrankCurzioResearch.com. That's Frank at CurzioResearch.com. Now, let's get to my educational segment. So I have oil, which is rising sharply. All right, take a little breather after it really went up. What is it? 12, 13, 14%. But it is rising after several drones attacked one of the largest processing facilities in Saudi Arabia. I just talked about that with Steve, knocking out 5.7 million barrels of production, or roughly 5% of the global supply. Now, the Saudis, I mentioned earlier, they said 2 million barrels will come back online next week. I'm not too sure about that. I think it might take a little longer. Now, let's put everything in perspective here. The Saudi oil processing facility, it's located near one of their biggest oil fields. To understand how big this is, our top 5 refiners process half the oil of this one processing facility. That's how big of a deal this is. Now, I've been coming through research, talked to my sources. Raymond James had some great research on it, saying the general rule in oil is the elasticity of oil prices to short-term supply disruptions is 5x. What does that mean? So a 5% disruption to oil supply should translate into a 25% increase in oil prices. This is based on other times where there's supply shocks or events like this. And this is the formula. It's not exact. It's not this is going to happen. But in the past, it's usually, oil price disruptions are usually 5x. So the fact it's a 5% disruption to oil supply, if you times that by 5, it's 25% increase in oil prices. That simply means based on this model, oil price should be trading closer to $70 a barrel and not $60 a barrel. So there still could be upside. And that's right now. But the stories I'm reading, which are, it's amazing, right? I mean, people could say anything now. Even they publish stuff, even in major newspapers, that's false now. I mean, how many retractions have we seen across the board? This is a Democrat, Republican thing across the board everywhere. It's like whatever gets page views, and don't worry about it. It doesn't matter if it's factual. No, I'm not going to disclose who my sources are. Nothing. I mean, it's crazy out there. Anyway, it's oil prices are rising, and now all the stories like the market's down because consumer spending is going to get hurt from higher oil prices, and you're going to hear how high oil prices are terrible for the U.S. and how they hurt consumer spending. Just when you read those stories, just know it's all bullshit. Because say the U.S. is now the largest producer of oil in the world, surpassed Saudi Arabia about 2 years ago. It's going to lead to much stronger profits for our energy companies and may lead to more jobs if we have an escalating conflict, which seems very likely between Iran and Saudis. Also, when it comes to consumer spending, guys, just pull up a chart. Consumer spending since the 1950s. And put that in Google. You're going to have a bunch of charts. And just look at it. It's amazing because it's a secular upward trend. Just go straight up. Just steady trend, high, all from 1950s to today. And during this time frame, oil prices have been incredibly vulnerable, down to below $20, even probably down to $8, $9 actually, if I go back that far to the 50s. And you're looking at 120, 125 oil prices. I mean, all these conditions during that period, yet consumer spending straight up. So people say, well, there's no proof that shows this hurts consumer spending or corporate profits. There's just none. It sounds like it should, but it just, I'm going to pay higher for that. But it doesn't stop people from spending on what they're usually spending on and what they like to spending on. It's just not. If oil prices go to 150, yes, that's a big deal. But you can't tell me it's $60 when, what is it, from pretty much, I think it was like 2000, don't quote me on this, but 2008, 9, 10, 11, 12, around there, they were above 90 for how long? In our economy, again, a lot of stimulus in there and QE and stuff, but oil prices were a lot higher than this, and we were okay, and consumer spending continued and went higher and higher and higher. So I love the stories that now oil prices, that's another shock. No, it's not a shock to the system. Actually, it's good for the U.S. because we're the largest producer. It's going to add jobs. And if you're looking at corporate profits, well, yeah, it could impact airlines, truckers, transportation companies who did not hedge higher oil prices, which most of them did, or hedge against higher oil prices. But if you're looking at oil as a sector, it's the worst component of the S&P 500 in terms of earnings, at least over the past 2 years. Now you're going to see earnings rise compared to the S&P 500. A lot of these companies are going to be producing like crazy because they can make a lot of money at 60. It's more like 50, like 45, 43 is a break even. Yes, in the Permian, in some areas it's much cheaper, but on average, it's still around $50. Some people say I could drill for $29, $30, or 1 to 2 wells. On average, it's around 45. From what I hear from people who actually are wildcatters that been drilling in 30 years, that's what they tell me. So I don't know what you read or whatever, but that's about the average cost. So now they can produce like crazy, and we need the oil. Everybody needs the oil. So you're going to see profits the next couple of quarters go up tremendously. That's not factored into the S&P 500. So just ignore all the BS around it. It's going to hurt consumer spending, higher oil prices. If it goes to 90, then make that argument. Not at 60. Come on, give me a break. Even at 70. No way. It's not going to hurt corporate profits either. A lot of these companies are hedged. They hedge fuel costs. They need to because energy is so volatile. So when you're looking at everything that's going on, how do you play this trend? Well, you have to have exposure to oil. I mean, I have it in both of my newsletters. I have 2 really great companies, one in Curzio Research Advisory, the other in Curzio Venture Opportunities. One of the great companies that I have, which I love in the sector, was down 25% before this news and went up like 10, 15% after and came back. And I think that's only one of 3 losers out of 19 stocks in the Curzio Research Advisory portfolio. I don't want to say that because I don't want everything to change. But the performance is pretty good in there and we do well, have a lot of winners. But oil's been terrible. But I still had exposure to that stock with a stop. And that's important. Because if you look at the last 18, 24 months, everything oil got killed. Now, why am I saying you should have exposure to these sectors? And not just oil, but look at gold, silver, a lot of commodity, uranium. And if you look at all these sectors, they're so depressed that if that trend changes, you're going to see massive, massive gains, which are going to add to your portfolio and help you beat the markets. You want to have a little exposure to it. Again, one stock in each portfolio. And the one in CVO is doing absolutely fantastic. It's a dividend play. We're first on it. It's Viper Energy. I'll give it away since it's well above the buy-up-to price. We took profits over 100%. What I love about that in CVO, Curzio Venture, is a high-price newsletter. For me, my job is to get into stocks that have massive upside potential. We limit our risk using stops. And you're going to find a lot of the stocks that you'd never heard of where I'm traveling around the world to find the best ideas for you. And this one was one of them. Where great guy used to work with the street, said, hey, take a look at this company. And this was like 3 years ago. And it's great because the stock went up 80, 90%. And then I saw 4 or 5 other newsletters recommend it and say, oh, this is a great company when we were already up 90%. That's the point of this newsletter, get in before everybody else. So we took profits, sold half, and we're still up nice on that position. But you have to have exposure to these sectors. Because when the tide turns, these are names that can go up 1x to 3x in a 6 to 12-month period because these industries are so depressed. Even though you're sitting there and saying, wow, this has a loss. Well, again, a little exposure to these industries, right? You're going to have more exposure to growth. Growth has been, alive. I know there's a week last week when all these stories came out about value's back and everybody's going into these stocks that have gotten crushed for 3, 4, 5 years in a row. You need a lot more evidence, guys. This is just algorithms jumping into wherever they see they can make money right now. So growth is still the play, still going to do well going forward, especially with low interest rates. But you should have allocation even to sectors that are underperforming because you're going to find really cheap stocks in it. And when that tide turns, things get better. These things surge from those super depressed levels, which you usually see in highly cyclical industries like gold, silver, uranium, and oil and gas. Now, names I'd be looking at in the oil patch, Pioneer. Why? Because they have tons of access to the Permian. They're going to make the most profits because it's the cheapest to drill there. Occidental also has exposure to the Permian, one of the biggest exposures to the Permian. Chevron, Exxon, of course, but as you know, they're diversified. They have upstream, downstream, just tons of operations. So not really, the best play there. Apache and Concho Resources. Apache is symbols APA, Concho Resources CXO. 2 more companies have ton exposure in terms of percentages in the Permian, in terms of acreage and how much they're producing in relation to their total production. So even though Oxy and Chevron, Exxon have massive exposure, I mean, you go to Chevron and Exxon, it's still probably whatever, 5, 10, 5, 7, 10, less than 10% of overall revenue, when it's 60, 70% a lot of these other companies, which are smaller because they really focus on the Permian. If you look at smaller names that have Permian exposure, Parsley Energy, Callon Petroleum. Callon was up 17% on Monday. But make sure you do your homework on these names. I'm throwing them at you. But you need to do homework. For example, there are only a few out of the 22 counties in the Permian, West Texas, where you can produce oil for less than $40 a barrel, even $35 a barrel. That includes Glasscock, Midland, Martin, Howard, Upton, Reagan. How do I know these? Because I visited every single county in these areas. I went with Cactus and also in Eagle Ford. Knowing which are the best areas, where's everybody focusing on, that's prime. So it's not the whole entire Permian. There's 22 counties. Less than half are very profitable. People say, we have Permian exposure. Ask where. Because that acreage is probably worth 2x to 4x more if it's in Midland, Glasscock, Martin, Howard, in those counties compared to the counties really on the outskirts of the Permian. Mostly on the east side. The west is starting to drill too into New Mexico. Also, you want to look at leverage. See how much debt these companies have and when it's due. They're going to have that in their presentations. It's not, oh, I got to dig through this. No, just go to their presentation. They better have that schedule of debt, especially if they don't. Then I'd worry. But most of these companies have their debt schedule of how much they owe, when they owe the most, what years, and they'll have like a, just a bar chart, for whatever, 15, 20 years, how long they're taking out debt for. Look at the leverage. Look at how much is due. Even if they have a high debt load, maybe they don't have to pay anything meaningful for 3, 4, 5 years, and this next year going forward, they can make a lot of money from this. Look at short ratios. I said Callon's up 17% on Monday because mostly of short covering. Over 40% of their float is short, which is insane. So I really like this name. I would wait for a pullback since I'm sure the shorts may look to reestablish their position once the market settles down, if it settles down. But I also like companies like AeroVironment, AVNV, since they're one of the largest manufactured military drones, including counter drones for governments. I think airlines are a buy here on this pullback. It's most hedged oil. Oil production is hedged, so they're paying a fixed price for it over a certain amount of time. I still like Delta a lot, which is incredibly cheap and growing much faster than the overall market. But the point is you need exposure to the sector. Don't go all in and don't think you missed a boat because we see prices rise this week. Because if tensions escalate and we see a war between two of the largest oil producing nations like Iran, Saudi Arabia, oil prices will skyrocket from these levels. Also, we'll likely see Russia and other OPEC members hold off on producing more oil, since the Saudis don't want anyone to take market share, and they all love higher prices. Remember, OPEC, it's a cartel. Their job is to work together to generate the most profits for themselves. They had total control of this industry before revolutionized shale in the U.S., and now we're the largest producer. If you look at that's why these guys increased oil production drastically in 2015-16, which pushed the price of oil under $30 a barrel briefly, where U.S. shale companies, at least most of them, can't make a profit. There's a lot of competition in this industry. Remember, these are corporations. This is how they make the most profit, and they're going to do in their best interest. Anything in their best interest, take advantage of this. So higher oil prices should be around for a few months. And if tensions escalate, prices along most oil stocks would definitely surge. And I think there's a very high probability that we will see escalation. Why? Because this is not a rebel attack, which some people suggested. This was planned and done with clear precision. There was 17 different strikes, which targeted 14 storage tanks and 3 processing trains. And each tank that was hit, the punctures from the drones, they were in the same exact position. Think about that for a minute. They want to launch an attack on a wind farm, just say, and you want to destroy 10 wind turbines. Each turbine was hit in the same exact position, whether it was 15 feet from the base or whatever. I mean, it's coordinated. It's amazing. There's precision there. This is professional. This is rebels throwing a grenade and running. And look at the satellite imagery, which is everywhere. But you look at the Saudi Arabia, they're going to have to respond to this or they're going to look weak. Now, if tensions do escalate, then you're going to see oil prices go a lot higher. A lot higher. And If I'm wrong and tensions do not escalate, which could be a possibility considering you have to throw this in there. This could have been an inside job. Just throwing it out there, considering the attack was absolutely perfect. They knew the exact targets to hit or which ones would make the most damage. And despite this huge, massive attack, not one person was injured. And if this is a real hostile attack, what do you care about when are you hitting it? You know, so it's not just to disrupt the supply. It's to really hit them hard. And who knows whether it's management team or whatever, who's on the facilities at the time. I mean, this was done when nobody got hurt. I don't know. But anyway, which is a great thing that nobody got hurt. It's just surprising. But if you're looking at this, you're looking at it's just the precision behind this was absolutely amazing. Could lead to itself to an inside job, which means maybe there's not going to be escalation, especially in tensions. So anyway, if we do see tensions, oil price is going to go higher. If not, if I'm wrong, tensions do not escalate, and we, meaning OPEC and the U.S., are able to make up this deficit we just lost, over 5% of the global supply, I don't think you're going to see a massive pullback in many of these oil-related names. Even after the recent surge, considering, I mean, if you look at the performance of these guys, they're down a ton. They're down a ton. So down 50% plus over the past 18 months, even after the move higher. So from a risk-reward perspective, definitely get exposure to this sector, just like you would do for gold, uranium, other depressed cyclical sectors, along with having exposure to tech, biotech, small caps, banks, other sectors, because as this is turning, these things are still super depressed. And if you see oil push through 70, 75, 80, these stocks are very, very undervalued, even at $6 oil prices right now. And now you have a little bit of momentum behind them. And I don't think this is a problem that's going to go away anytime soon. So definitely get exposure to oil. I shared some names with you. Again, do your research on those names, but those are the ones with Permian exposure that should do the best as oil prices continue to go higher. So guys, a lot of stuff here on oil, covered extensively. Thanks, Steve, coming on short notice, which is great. So that's it for me. Thanks so much for listening. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.